All right, good afternoon. Welcome back here to Trader Money. Great to have you aboard. Market's getting ready to close here in about the next 40 minutes. And, theme here today, no change, no safety, here in the market. We saw an initial sell-off. I talked about, hey, if we sell off, rally back, I'd like to be a buyer. I'd like to step in. And as I'm watching this rally right here, take place, and this rally looks kind of small on my screen, but it is about a 40-point rally, right? In a matter of an hour, about 40 points, so we're not exactly talking about price stability, but okay, we had the sell, we had the rally back. Okay, are we in for a bounce? And I start looking at some things, and some of the stocks that signaled short-term buys for me, I start looking at them, and then I start looking at the option prices. And it was very clear very quickly that it just wasn't worth it with where the option prices were, what they looked like. In that, even if I'm right, chances of making money are very slim. And that option environment remains. And that option environment is pretty intense. And will it ultimately switch? It will. Will there be areas to take advantage when the timing is right? Yeah. But where it sits right now, it's just not something that, I'm willing to step into. And then, just kind of watching this rally get sold into, just like most. And, down we go, and we're incredibly oversold still. But, down it goes and erases that, that buy-in that we saw. And so, what's it tell me? No change. If we look at the market metrics, there's no change. There's nothing different. It's still absolutely dominated by the bears. And what's the bull's argument? Oversold. That's the bullish argument out there, because almost every technical measure is substantially oversold in a very big way. But oversold doesn't mean it has to rally. Perhaps the biggest drama today is the Treasury Department getting involved in things. And boy, just watching my message feed and, some of the comments that have come in, they seem to really be backtracking a little bit from what they did yesterday in terms of, I think they're not getting the result they wanted. And so they're trying to come out with even more reassurances and calmings, and that's just not going to help. The Treasury Department silent will be better for the markets than Treasury Department yapping, and they just don't realize it. And I think perhaps they think they have more power, but they have a lot of power. They definitely do, and they're using it, and they're not getting the result they want. And past history should show them that, this is what happens when they yap, and staying quiet is definitely the better path, for them overall. But regardless, it is still just one of those where it's sell pressure, it's sell pressure, it's sell pressure. If you have good news, you're up a little bit. If you have bad news, you're down huge. And if you have no news, you're down with the market. And that is, that is what is happening, and that is what will likely continue until there is some bottoming here. We've seen the volume bottomings come in. We have seen, some historical oversold metrics coming in. They're all there. They're all in there, right? But we haven't seen any sort of upside confirmation come into play. Now, today's sell-off's a little bit different than some of the ones we've seen here of late, particularly when we look at what's selling. You take a look at utilities. I say no safety. Utility has been the safe haven. They're down 4.5%. In one day, wiping out months worth of gains. There's no safety in utilities. The dividends and all. No safety. Oh, well, wait, energy prices are going down. Should that help utilities? Nope, no safety. There is no safety in this market right now. Oh, commercial real estate? Man, come on. IYR, so now IYT. But here's IYR. Commercial real estate. It's the safety area, right? I mean, rents aren't changing. Right now, the commercial real estate, ultimate safe haven getting shellacked. Consumer staple stocks. I mean, Pepsi opened up $1.50 higher this morning. Yikes. selling, selling, selling ever since. And so there just is there's no safety point out there. Here's consumer staples, right? And basically in the last 7 days, they've given up all their gains from May to November. And so, you look and you say, well, some of the tech stocks are holding in very well today. You're right. It's not the tech stocks that are dropping this market today. It's these safe havens. And, in many ways, healthcare has been a little bit of a safe haven. And this is also getting just absolutely lambasted and, put into a situation where it's bloody. It is absolutely bloody out there. And, as we start to go into year end and start to look at next year, you're going to start hearing about a lot of funds closing, hedge funds closing, fully just liquidating through this and going out of business. There's going to be a lot of that. And it's going to be one where, we're going to have a really nice oversold bounce. But, to have a V-shaped type of rebound from this point, it's going to be very, very tough, for the markets to do. So basically, no change, no safety, and for me, I look and I go, okay, short-term option trade, anything? No. I mean, I've priced out the VXX again here today. Let's see, why is that coming up? There we go. Priced out the VXX here today, and for some reason, let's see, I don't have the right thing triggered here. Let me get it. Yeah, I'll have to mess with the settings here. But overall, the option values are pretty intense still. And that's not changing, and it's rightfully so. I mean, it's not that they're priced incorrectly or anything like that, but you take a look at these VXX options. Last week I was looking at the 44s. They're now about 80 cents for next week. It's still not one where I'm convinced that I have a great advantage, and you can just see, on Friday morning. These options were $2.35 and now they're 84 cents. And, that is still, these 49s can still go to 84 cents very quickly. And there's not enough time for, much of a rebound in all. My just kind of gut feel, I suspect the bottom is here. I suspect that, we see a year-end rally. I suspect that we're talking about 2,600 on the S&P before we're talking about 2,300. That's my suspicion for a lot of reasons. Now, I can't play it yet. I can't, step in and play it with options very much yet. I can go and buy some sort of a call spread or something like that, and I've looked at that. And do I do that for the challenge? And I'm very, very tempted to go out and to jump into a little bit of a January call spread that takes advantage of some, potentially sharp upside, because it wouldn't take much upside, to pay these off decently. But even these spread prices are not all that cheap. They're not in positions where I go, wow, if I'm right, this is a home run. No, if I'm right, on this 245, 246, if I'm right, I make 3 times my money. And that's for being 5% out of the money. Oh, man, I mean, they're not paying. And when I talked this morning, that options environment's very different than what it was in 2008, 9, even 11. It's this type of a thing. Back then, you could come out and get some of these for dirt cheap, just absolute dirt cheap. And, you pay off a couple of them, and it's just a home run environment. They're not paying. They're absolutely not paying, and, to the same degree. Now, if you're right, you make 3 times on your money, you say, oh, well, great, fantastic. But, that reward potential for the risk being taken is dynamically different. is dynamically different right now. So I'm going to hold off, even though my suspicion is bottom is in. And, a lot of that has to do with the volume and the fact that we had option expiration. And when you look at some of the sentiment leanings that are out there, it is, we're talking historical extremes. And so my suspicion is that we rally sharply from here. But this is kind of what it looked like in 1987 before the crash. When you go and look at 1987 and that big crash, and you look at what this market environment was like, this is what it looked like before the crash. So, do I want to get really stuck in without some upside confirmation? No, not at all. I mean, we still haven't had a day where the market is closed above the high from the prior day. Just haven't had any of that. And so, I'll stay in my cash and go from there. Wait for that right environment, because look, as soon as it switches a little bit, it's going to be a pretty option friendly switch, and something that something that I really want to be able to take advantage of, rather than holding something here through it. Thanks for hopping on. Thanks for being with us. Happy holidays, Merry Christmas, Happy Hanukkah to all of you. I hope you have a great time with family, friends, and we'll talk to you later. Take care.